the Bitcoin halving 2020. What does it actually mean? How does it work? And if you're interested in investing in Bitcoin, should you be buying before or after the halving? Let's take a deeper look in today's video. Hey and welcome to today's video. My name is Julian. On my YouTube channel, it's all about investing mostly in Bitcoin and cryptocurrencies, but sometimes we discuss stocks, gold, precious metals, all kind of good stuff to multiply your money and in the terms of cryptocurrencies to make you cryptofit. Today, I want to discuss an important event that's happening on May 11th, 2020. And it's something that has happened only 2 times in the history of Bitcoin, and that is the so-called halving. And what I want to discuss is how does this actually work and what does it mean? Now, you might have heard in the media that the halving is happening and that's going to make Bitcoin shoot to 300,000 from, 8,000, 9,000 right now. And that's why you should be investing right now. And you're all crazy, you're foaming out, you're getting fear of missing out. And so what I want to discuss is I want to kind of walk through those steps. What does it actually mean and how does it all work? So before we kind of dive in and go a bit into, so if you're interested in all this, how do you get started? Let's get some of the background out of the way. And let's start with this very first question. What does this halving actually mean? In order to understand this, we need to understand a very simple concept in Bitcoin, and that is the so-called mining concept. Mining does not mean that Bitcoin is created. That's how much of the media kind of explains it. But what it actually means is that supercomputers, so any kind of computer, a lot of those so-called mining computers, need to solve or need to attempt to do a mathematical problem. And it's called the mining. So they need to hash something. What this means is mathematical calculations, and whoever achieves more of those calculations in a certain time has a higher chance of actually solving this mathematical puzzle. You cannot really calculate it. You have to just try and you have to attempt. And whoever wins this puzzle, and normally someone wins this puzzle every 10 minutes approximately, is the person who can choose which kind of Bitcoin transactions go into an update. And this update is what's called a block. And the maximum of the updates that can go in there, depending on the size, is around 4,000 to 8,000 of those updates in one 10-minute block. So what basically actually happened is that this computer, this miner, actually mined a block. So he or she kind of was the first one to assemble all those transactions into one update and then sends this to everyone else, and everyone checks this really briefly. This takes a few milliseconds, says, yep, that's good, you haven't been cheating, and they just copy that and add the same information block to their blockchain. And that's basically at the end how a blockchain is created, by adding more and more information, data, to the other blocks. So what does this have to do with Bitcoin and how Bitcoin is created itself? Well, this takes electricity and this takes a lot of work, and that's how consensus is basically created. So what the protocol of Bitcoin said from the very beginning, that whoever mines a block is rewarded 2 things. The very first one is all the transaction fees of the transactions in this block. And on the other hand, Bitcoin get created out of nothing and are awarded to the person finding the block. And in the very beginning, this was 50 Bitcoins per block. And this was for the first 210,000 blocks. 50 Bitcoins were awarded, so you can do the math, do 50 times 210,000, and you will understand that this was actually approximately half of all Bitcoins. So 10.5 million of all Bitcoins were created in this very first 4 years, because it takes around 4 years to kind of find those first 210,000 Bitcoins. So from 2009 until 2012, this was how basically Bitcoin was created. Now, then afterwards is the so-called halving. So in 2012, we had the very first halving, and that means from that point onwards, so from the 210,001 block, only half of the Bitcoins were now awarded to anyone finding the block. And it was 25 Bitcoins. And this happened for the next 210,000 blocks. And this happened all the way until 2016. And so since 2016, we have been having 12.5 Bitcoins for every block. So whenever someone finds this block, 12.5 Bitcoins get awarded to this miner. And at this very moment, this is around an inflation of 3.6%. That's approximate. So 3.6%, that's how the inflation rate is in the Bitcoin ecosystem. And so now this is where it gets very interesting. From May 11th, approximately, because we don't know exactly when those 210,000 blocks from 2016 onwards, when they exactly get mined. So it's very likely that it's going to be on May 11th. From that point onwards, we only get another half. That's why the halvening of new block rewards. And that's 6.25 Bitcoins for every block. And if you kind of put this into inflation, that's half only. So it's not 3.6% anymore, it's 1.8%. Now, why is this really relevant? Well, as you know, in any kind of monetary system, the less money is put into the system, the more valuable the existing money is. Now, you might be sitting here and saying, well, but those 1.8% less, is this really such a large amount? Does this really have such an impact on the price? Well, that's a very difficult question actually to answer. And looking back into all the last halvings, and remember, we only had 2 halvings so far, in the short term, it actually didn't have so much effect. Actually, in the short term, it was actually negative on the price. So mostly right after the halving, the price kind of dipped a bit. And the reason for this is the mining economics and some of the uncertainties. Well, think about it. Miners are expecting at the moment to get 12.5 Bitcoins every time they find a block. And that's how much electricity they invest, how much in the machines they invest. And now suddenly from one block to another, so within 10 minutes, their entire reward basically halves. So suddenly they're spending way too much money on electricity, they're spending way too much money on machines, and so now this entire economic system kind of gets a bit out of touch. And we have seen this in 2012, we have seen this in 2016, and we're very likely expecting this in 2020. So if you ask me what's happening on May 11th, May 12th, I think we're going to see a little bit of disruption. We're going to see some negative press. We're going to see some negative kind of media posts because people are like, hey, look at this. The miners are kind of collapsing. Miners are capitulating. But at the end, and this is what happened every single time, you had new dynamics come in. You had some parts come in that say, hey, you know what? It actually is profitable. I can actually make money out of this. And you had miners drop off, new miners come in, and suddenly you had this equilibrium again. And that normally happens within a couple of days, maybe a couple of weeks. And then suddenly, people start to realize the main sellers, the net sellers of Bitcoin are miners. The traders, they trade back and forth, but generally speaking, it's kind of a net. Maybe there's a small net demand, net outflow, but that just depends on market dynamics. But the only participants who actually get Bitcoin, but they need to pay everything in dollars, in fiat, are the miners. No one else kind of has to do this on a net basis because that's where Bitcoin is created and their fees are in dollars. So suddenly, they're throwing a lot less money on the market. And by a lot less, I'm talking about 1.8% per year. And that is a massive amount when you consider that most of the actual selling, not the trading, the selling, is actually happening from miners. And it's 50%. So that's going to have a massive effect actually on what's happening for the entire ecosystem. And that is why many of the insiders, many of the Bitcoin hodlers, the holders, are expecting that over the months and obviously years following the Bitcoin halving 2020, we could see extreme price increases. Now, this doesn't mean that we're definitely going to see them. There's numbers being thrown around there. The Bitcoin could go to 100,000, 300,000, who knows? But it's very likely if demand stays and the supply suddenly halves, that prices, just simple by equation, are very likely going up. And so that's the interesting concept behind the Bitcoin halving and behind what is possible. It is because suddenly there is way fewer Bitcoins being offered from the net sellers compared to a block 10 minutes before. And obviously that brings us to a very relevant question. If you want to kind of capture all this price increase, should you be investing now prior to the halving? Should you be waiting after the halving? What should you actually be doing? And this is actually the question we would love to discuss next. So let's briefly discuss if you should be investing prior or after the halving. And here my tip is a conservative one. It is that you should probably do both. So let's say you consider a certain amount, and we're going to discuss in a second how much you actually should be investing. But I would probably do whatever amount you pick and half before and the other half after. And the reason for this is because it's very difficult to predict if you have a good price right now or if you have a better price later on. So I always believe in hedging your downsides and taking the more conservative approach. Don't FOMO, don't fall for the fear of missing out. One half right now, one half after the halving would be my tip. Now, let's talk about the next question, and that is, how much should you actually be investing into Bitcoin? And that depends a lot on your personal risk profile, on your age, on your total capital, on your appetite for risk, and so on and so on. There are a couple of numbers, though, that really kind of make sense. And the very first number I kind of want to throw out is anything higher than 0. I think one of the biggest mistakes, and it's been shown over and over again, is to invest 0% in Bitcoin. Bitcoin has been the top performing asset over the past 10 years, and anyone not having kind of taken a ride on this, in my opinion, really is not good at a risk profit kind of profile rating. And even larger and larger investors kind of go now and say, you know what, I'm just investing the total market cap compared to everything else. And that in Bitcoin is around 0.1, 0.2%. So you invest around 0.1 or 0.2% of all your capital into Bitcoin. Now, even this would have significantly had an impact in your portfolio, and you would have only lost 0.1 or 0.2%, which is pretty much nothing of your total overall. I mean, that's a daily fluctuation in the stock market. I personally think that's almost a bit too low. I would go up higher. There's a very interesting kind of approach calculating with the Sharpe ratio. That's kind of the volatility to its return. That kind of suggests to invest around 6% of your total net worth into Bitcoin. I think that's actually the most rational approach. I think anyone kind of doing 6%, I think that's a very, very neutral approach that's purely mathematical. So that's not super conservative. That's not super aggressive. I think that's kind of the fair, like based on mathematics, I think 6% is a very, very smart approach. Now, I personally do around 10 to 20%, so I would probably go a bit to the higher end. Normally, I always said around 10%. I would feel a bit more comfortable right now going a bit more into the aggressive part, especially looking at what's happening in the world, what's happening to the economy, how all the money printing is going on. So there I'm tending a bit more to the upper side, but that's again me, and everyone kind of has to make their own suggestions or own ideas in all this. So talking about when and how much, I guess the last question is, so how can you do it? Actually, it's a very simple step. So if you have never bought Bitcoins before, what you do, step one, you sign up with a reputable exchange. Now, I linked down the exchange that I would probably use. You can do it with bank transfer. You could use a credit card on it. So just check it out. It's down in the description. That's the exchange that I would use. I think it's a super, super solid exchange, one of the largest ones in the world. So that would be step number one. Step number two, on the exchange, you purchase the Bitcoins once you deposited your US dollars or euros or whatever currency you're using once you deposited this on this. Now, depending on your amount, you either have to kind of do some limit orders, but most of the time, probably a market order kind of makes sense because probably you're not going to kind of go through the entire order book. But that depends on your experience level and how simple, how complicated you want to have the entire process. Again, I would probably split this. So do one half right now and the other half wait for a bit after the halving. And then the third step is basically, where do you store your Bitcoins? If it's a relatively small amount, I think you're okay leaving it on a reputable exchange. The exchange that I link up, I think, is solid. I think that's okay if it's a small amount. Obviously, once the amounts get larger and you want to actually be in full control of everything, you want to use a so-called hard wallet. And I'll link down below the hard wallet that I personally use that I think is a really, really, really good solution. And that is, if you really want to be in control of your own Bitcoins, I highly recommend this once the amounts get larger. One extra tip. I personally am the CEO of a company called Cake. And we offer people who deposit their Bitcoins with us 6% returns at the moment on their Bitcoin on an annual basis. And this can be super interesting for your Bitcoins because that way all you have to do is you hold them, and you get kind of Bitcoin flow on your Bitcoin. So this might be very interesting. And if you want to, check it out down below. We're extremely transparent. We offer some of the highest returns in industry, and I think this could be very interesting for you as a whole. So with this, I hope this kind of explains to you what mining is, how this halving works. It kind of answers all the question, what's actually halving and why couldn't this have some impact on the price. I hope it also answers any kind of question around what you should be doing during these times. And should you have any questions that are left open, then please let me know in the comments down below. And yeah, I'll definitely be looking there. I'll be answering those questions. And yeah, if you're watching this on Facebook or LinkedIn or listening to it on a podcast, then as always, you can just always comment, like. We would appreciate that if you follow the profile so that you're going to be updated on when the next thing is coming out. On YouTube, please click the bell icon so you're not missing out on any of the videos. With this, all the links for it are in the descriptions down below. Check it out. I hope this answers everything. Looking forward to see you at the next video. Yours truly, Julian.